Let me open with a word of prayer, and then we'll get down to business, right? Father God, we do thank you for your hand on Phil-Mont Christian Academy.
Yes, Lord.
I thank you for the work that you're doing here every day with young people, children. Thank you for the way you have sustained this ministry. And I thank you tonight, Father, for this provision of the Educational Improvement Tax Credit Program, which may provide a cost-effective way to get more funds to this ministry in a way that's workable for people. I pray that you would allow us. I thank you for Chris Browne, my friend in particular, the knowledge, the background that you've given him. I pray that you would allow him in particular to be clear. May we be discerning of your spirit, hearing one another, explaining lucidly, and may this evening be edifying even, as well as glorifying to you. And may it be a productive time. In Jesus' name, amen.
Amen.
All right. So in some publications that you will see, like in the Signet, if you get that, you will see me describe the Educational Improvement Tax Credit Program as the most exciting, bureaucratically boring program that you should consider. And I am Dr. Todd Mangum, head of school here at Phil-Mont Christian Academy, and I am thrilled this evening to have with me my friend, former seminary student, now a pastor, but also a certified financial planner with significant experience working with businesses, institutions, families, individuals in finding ways to and helping people find ways and consider contributing to the Educational Improvement Tax Credit. So I am very thankful to have a genuine, bona fide expert in it with great experience to explain some of the principles. I will tell you that I have participated myself in the Educational Improvement Tax Credit Program, so I have that experience. I know what it feels like as the taxpayer, but it's worthy of explanation and it's worthy of consideration. So yes, that was Chris Browne. He's here. He was up there. Our agenda for tonight is to survey. Now, I could spend the whole night on number one, the state of Christian education, but that's not why we're here tonight. But the state of private Christian education, the establishment of the Educational Improvement Tax Credit Program, and Chris is a virtual expert in not only the mechanics and logistics, but the history, some of the benefits, and then thinking strategically of how to contribute. And of course, we'll wrap it up with next steps. That's me. There is no picture of me. You have to deal with just the presence of me here, but this is who I am. The state of Christian education. The benefits of private Christian education are myriad and vast, and we experience them every day. And we could enjoy the evening together talking about the benefits of private Christian education. We happen to be going through at Phil-Mont right now a period of self-study, accreditation. Just this very morning, we were surveying together, had different strands, different groups that have collected data and began presenting strengths and weaknesses and areas of potential improvement and areas of strength that we should be sure not to lose. One of the great strengths at Phil-Mont is biblical integration. That is, the truth of God's Word permeates every classroom with every subject. I mean, it is unique to private Christian education, and some of that distinctiveness of strength, I think, is distinctive to Phil-Mont. The benefits of the community, godly mentors, from coaches in track and field, from the basketball court, to art teachers, to music teachers, to math teachers, to science teachers, all Bible-believing Christians that love the kids that they teach. We have lockers here. I love it when our director of enrollment takes tours and he shows people the lockers, and he says, actually we call them unlockers. We don't need locks here. We're a Christian. Now, we do have security cameras, but we don't need locks here. We don't need locks here because it's that kind of Christian environment. Very different from what you get, unfortunately, in non-Christian education. The opportunities and challenges. Unfortunately, unlike the public school system, we do not get state money. We get some state support in terms of the Montgomery County Intermediate Unit. We get some support that way. We have some requirements of the state, including our accreditation has to meet state standards. But it is a challenge for us to operate the same high quality, academically credible Christian education without state tax funds. And that challenge, that budgetary challenge, poses one of the central features of our strategic planning. How can we ensure, without raising the cost of tuition through the roof, how do we keep the cost at a reasonable level that Christian families in this area can afford to keep us as the first choice for quality Christian education in this region, and yet maintain this 100-year-old building, pay our faculty at a living wage level, and then, and this is part of where EITC, the Educational Improvement Tax Credit Program, comes, be able to offer this Christian quality academic education even to Christian families who cannot afford the baseline tuition. So I will tell you that Phil-Mont Christian Academy every year gives $500,000, $500,000 in financial aid to families at Phil-Mont. If you are not a beneficiary of financial aid at Phil-Mont Christian Academy, I guarantee you that the class that your child is in has classmates that do benefit from, who do need that financial aid money, or they would not be able to afford the Phil-Mont Christian Academy education. And that's what takes us to the Educational Improvement Tax Credit Program, which this actually was Chris Browne's titling of this, a missional development. There actually is a Christian missional purpose behind it. And now, Chris, I'm going to turn it over to you.
So the Pennsylvania Educational Improvement Tax Credit, what is that in particular? Well, in 2001, there were laws that came into being that allowed businesses, tax credits to eligible businesses, contributing to a scholarship organization, an educational improvement organization, and or a pre-kindergarten scholarship organization. It allowed those businesses, 2001, to make contributions into particular funds or accounts for the purposes of providing scholarships on a need basis, on a needs-based basis. Needs-based, what does that mean? Students are eligible to receive a scholarship if their household's annual income is no greater than $108,000 or about $109,000, plus about 20 grand for each dependent member of the household. Mind you, this 2001 law was about businesses. It allowed businesses to contribute to this fund. Well, what happened is in 2014, Pennsylvania's EITC legislation was amended to allow individuals Okay, so this is big. So first, it was the state was allowing businesses to direct their excess income, profits, margins, whatever it may be, to wherever they might deem or choose in order to fund or help fund scholarships for private education. Okay? But in 2014, it was amended to allow certain individuals to participate in that program through what is called a special purpose entity. It's essentially legally laundering money. It's a legal launder. Okay, y'all watch the movies, right? Laundering money is illegal, except when it's not through loopholes in the U.S. and state tax system, right? So this is a legal launder of money to use a special purpose entity, basically setting up a business for the purpose of passing through money so that individuals can make the same type of contribution to the educational improvement tax credit. How did this special purpose entity come to be? Well, I read up that it was with a passion to help more children in Pennsylvania receive a quality Christian education. It was actually a certified public accountant by the name of Randy Tarpey. He actually established the very first SPE in the state of Pennsylvania back in 2011. It didn't actually take effect until 2014. So this vehicle for giving allows individuals and other legal entities not qualified to receive credits directly from Pennsylvania an opportunity to receive the same tax benefit. So there was an accountant who was a Christian who was inspired to look into the tax code to see that what was typically only allowed for businesses to participate in, now individuals such as you and I could participate along with those businesses and make contributions to the educational improvement tax credit. So what's the eligibility to participate? One, businesses that are authorized to do business in Pennsylvania who are subject to one or more of the following taxes: personal income tax, capital stock or foreign franchise tax, corporate net income tax, bank shares tax, title insurance, insurance premium tax, mutual thrift tax, malt beverage tax, surplus lines tax. Okay, a whole bunch of taxes make you eligible to participate, but here's the one you need to know: personal income tax. Okay, that's what makes you and I eligible to participate in the educational improvement tax credit through the special purpose entity. We can go on to the next one. Pennsylvania personal income tax is levied at a rate of 3.07%. In case you didn't know, you can round it up to 3.1. Taxable income of resident and non-resident individuals, estates, trusts, partnerships, S corporations, business trusts, and limited liability companies not federally taxed as corporations. So either individuals or their businesses can participate in the EITC. So if you are a person who files your taxes and you use your own or you channel the filing of your taxes and your personal income taxes and you tether it to your business, that could also make you eligible as well. So the personal income tax is the thing that makes us all participation eligible. So let's see what EITC actually does in action. One, the purpose of it, as we already went over, is EIT funds need-based scholarships, which we know is a barrier in private education. Okay, so how does it do that? If we look at this chart here, we'll see that typically it has been known that it's a $3,500 gift minimum. However, there are additional folks that have made that be as little as $1,000, right? So we have other folks, Christian folks, working through chopping down barriers for folks to be able to participate. So let's say in this particular example, you had Pennsylvania taxable income of $114,000. your PA taxable income with or without that money or with or without that gift will still be the same. Mind you, this is a credit, not a deduction. So a deduction would say if you gave $3,500, then $3,500 would be taken off of your PA taxable income. So it would look more like $110,500. But this isn't a deduction, this is a credit. And credits count more than deductions because they're dollar for dollar, okay? So it doesn't change your taxable income, okay? But it takes that same $3,500, has the same PA tax liability on that same $3,500, credit, not deduction. However, with the credit coming back to you of 90%, 90% is what you get as a credit when you commit to 2 years of a contribution. Okay? So when you commit to 2 years, 1 year gives you a 75% credit, a 2-year commitment gives you a 90% credit. So 90% of $3,500 is that $3,150. Mind you, in the middle column, it's $0. This is with no EITC gift. So your Pennsylvania tax due is reduced by the 90% tax credit there to $350. That is how the EITC works.
All right, let me chime in
Go
a
ahead.
couple of other details here of additional benefits if you are a Phil-Mont Christian Academy family.
There you go.
If you are a Phil-Mont Christian Academy family and you participate in this program, your family will get a $500 tuition discount from Phil-Mont. So there is that incentive as well. Every year you participate in the EITC and make Phil-Mont Christian Academy the beneficiary. That's who you direct the special purpose entity
That's
to
right.
direct it to. Your family will get a $500 tuition discount. Now, as Chris said, you do get that 90% back. I will say to you, one aspect of my experience that's on the negative side, we're not trying to sell it, in an illegitimate or misleading way. It took the Pennsylvania state IRS over 6 months. It should take 6 to 8 months, they advise. Last year, it took almost a year to get that refund back. Someone asked before we started, well, isn't it the same Pennsylvania tax processing? Yes, it is, but when you participate in EITC, particularly the first year, you go into the odd special file, and it takes 6 months to a year to get that refund back. So the first year, it's going to feel like a gift. I mean, in other words, you have to do without it in your budget for that, however long it takes them to get it back. You contribute earlier in the year. Maybe I should say a word or two about that. And then when you do your taxes, you get it back. But you've got to be without that money in your budget till it comes back. Now, so that's. But you get that $500 tuition
It's a little caveat.
discount. All right. One other element that's it's not unique to Phil-Mont, it's unique to the Association of Christian Schools International that Phil-Mont works with, or they work with us to help facilitate EITC tax program giving. They will accept the EITC contributions all year long. Now, the organization I worked with when I did it would only take it, they had a deadline of July or August. ACSI will take it all year long, and their organization, their SPE, is called the Children's Tuition Fund. You can hear the layers of bureaucratic sounding things. There's a layer of this. But they are willing to take EITC contributions as low as $1,000, which means a family that has an annual income, Pennsylvania taxable income of low 30s, can participate. And I'll leave it to financial planners like Chris Browne to advise you as to whether you should, how to work it into your budget. But those are particular benefits, helps, elements that Phil-Mont Christian Academy offers in this program.
I mean, this is the whole purpose, is not necessarily the credit, right? Because
Right.
you're paying the taxes or you're giving the gift. Either way, the money's coming out of your pocket. The idea is what the EITC allows or facilitates for private Christian education, particularly the school communities that we're attached to.
Now, did you say you're either going to pay it in taxes to the Pennsylvania state government or give it as a gift to Phil-Mont?
That's what I said.
Can I just recommend that it's better to give it to Phil-Mont? I mean, I know I've got a little vested interest in that, but I think that's better, don't you, Chris?
Well, that's what it says. EITC gives you autonomy to redirect your PA tax dollars to help improve the quality of education for our children.
Amen.
The other thing that the EITC does is, you say 90% tax credit. That other 10% that isn't covered by the credit, it's actually still, you can use it as a federal tax deduction. So you can claim that excess that's not covered on your federal taxes. So for some people, they might actually get some money back. That may not be the story for everybody, but pretty much it all just comes out in a wash. But the key thing here is that you're helping fund quality Christian education here at Phil-Mont with money you were going to pay already. And the money that goes to, and this is just what I'll say too. In Pennsylvania, we have suburban districts that sit on coffers of money that are able to raise money for capital improvements through bond raising and other different types of things that they can do. So not only are they getting property tax dollars from a pretty good base of taxpayers, normally middle-income Americans, but they're also able to raise that capital through public raising of funds as well. So they have those two sources of income, and many of them are sitting on tens of millions of dollars, what they might call rainy day funds.
Yeah.
I don't know about you, Dr. Mangum.
We don't have that.
You're not sitting on tens of millions of dollars?
In fact, we talk about this too much, I'm going to get mad. But, man, right? But yeah.
So that's a big problem in terms of even within the public education system, in which we constantly see our urban school districts are hundreds of millions of dollars behind in their budgets.
Yeah.
So this is a key way to get people to contribute, to help to spread out the pile of money and take autonomy with their dollars and direct it to the community that they care about. Okay, so here's what you want to do, though. You want to structure your EITC gift correctly. What do I mean by structure it? Before you give your gift, you want to make sure that you're dealing with an accountant that knows what to do and how to file the correct paperwork for the EITC. Not all tax preparers may actually be comfortable doing this type of thing, so you probably will want to consult a CPA. Okay? And that CPA will be able to help you understand the immediate and near-term implications on your tax liability in the current years, meaning the 1 or 2 years that you may make a commitment. Here's the additional thing that you'll want to do. You'll want to consult your financial planner on structuring your gift so that it is to your best advantage in your mid and long-term financial strategy, if you have one. So in other words, where you source your gift from is as important as you giving the gift in the first place. So if you're giving the gift out of your need to get a $500 scholarship, but then you're running up a $1,000 bill in debt, that's not going to help much. You may end up owing $500 in interest on a credit card.
Right.
Okay, that wouldn't be helpful. But also, if you're giving cash from your bank account because you have the disposable income, but you may have highly appreciated stock Let's say you bought Apple stock, or you bought, Microsoft stock, or you bought any number of different positions, and you have highly appreciated stock. You can actually use that as your gift and give the stock directly over to the special purpose entity. So those are the ways in which you have to be smart with regards to how you structure your gift. One, you have to be dealing with somebody who knows how to file in the correct way. But then two, where are you sourcing that particular gift from so that it is to your best advantage, not just in the short term, but in the mid and long term?
So let me just speak personally on a couple of those points. When my wife and I had some changes, I'm clergy, so my taxes are complicated anyway. They were more complicated than they are now. But particularly when we started to participate in the educational improvement tax credit program, I used to do our taxes on TurboTax. Mm-hmm. But once we did that, I got a tax accountant to do our taxes. And of course, you pay the tax accountant money to help with these things, but they got us higher. They got us higher refunds. That's why you pay them, and they know what they're doing. So I don't know, Chris, if you or if your firm does tax accounting, tax planning, but we had a tax planner that helped us with our taxes in part to help us do this correctly, do this well.
Mm-hmm. Well, that's absolutely. So I have several accountants that I work with all over the region. So whether or not you're situated downtown, Northern Liberties, Hatboro, Horsham, Langhorne, Doylestown, I know accountants in several of those different areas. So if there is, a need that someone has to actually start dealing with a CPA instead of running the TurboTax. Yeah. Good luck filing the EITC with TurboTax, okay? I don't even know if you can do it. It's such an intricate thing. Yeah, and you might be waiting for 2 or 3 years for your credit back. Hey. But this is a thing that a lot of schools are doing. In fact, public schools are even trying to do the EITC still, get more money. So be witnesses from here to Judea, okay, about the EITC tax credit and how people can really help to support schools like Phil-Mont Christian Academy.
Should we talk next steps?
Sure, let's go to next steps. All right, so you can contact Phil-Mont for more information. You said what's the accrediting organization?
The Association of Christian Schools International. They have a whole division set up to facilitate EITC giving, EITC tax program participation. So we have links. That's a link to our website. There are links within that link. There are videos on there that give more information. It's really no more complicated than filling out a Schedule A or Schedule C. But, there are a couple forms to fill out, and there's timing issues to field. But, the benefit to Phil-Mont is tremendous. I'm wrestling here with whether I should say this, but I am. I met with my friend. He was a friend before I became head of school here at Phil-Mont, but Pat Fitzpatrick, who's head of school at Plumstead Christian Academy, and then there's Faith Christian Academy in Quakertown. They pull in hundreds of thousands of dollars. That's hundreds of thousands, not thousands, not tens of thousands, hundreds of thousands of dollars through the EITC tax credit participation program. And part of the reason that is such a popular way of getting money to the school is that, yes, it's a gift to the school, but you eventually get most of it back. And it's really a way of allocating your tax dollars to the school. So it's, yes, there is a reason why ACSI, helps facilitate. There's good money that to be had through this program in a way that works for everyone.
And God made it possible, right?
Yes.
God put the idea in Randy's head to say, hey, if businesses are taking advantage of this, is there a way that we can get individuals on board as well? And God inspired, gave revelation to him to be able to act on that impulse and figure out where can we operate within the confines of the tax code to be able to do this and provide quality Christian education. All right, contact your accountant is the next step. We've talked, I think, enough about that. And then lastly, contact your planner, okay? So I'm a certified financial planner. Make sure you're working with somebody who's a CFP, CFA, CHFC, somebody who is a fiduciary by practice that can help you and advise you in things that are in your best interest.
Chris, do you know of a CFP that you would recommend?
Other than myself?
Oh, yourself. All right, there we go. And yes, I mean, a person of integrity, and I think you can tell already, a person of knowledge, if, you know, I mean, a commendable person that the Lord has, you know, brought into our orbit here as well. So great to have you here tonight. It'd be great if you could help some of our families too.
Absolutely.
I think the last thing is thank you, and we'll take some questions. We've got a little time left. And I think for the sake of the recording, I'll try to repeat the question in the microphone and do it that way. Any questions? Okay,
it's both and, Dr.
Yeah,
Mangum.
so the question is, I want to repeat it for the recording.
Right.
The question is, if a person wants to participate for only 1 year, or they sign up to do it for 2 years, but something happens, their financial status changes, and it turns out they can't do it the second year, what happens?
Yeah, so the whole thing is that for 1 year at a time, it's a 75% credit. So that's what you would receive on an ad hoc per year basis. But if you do a 2-year commitment, you receive a 90% credit. So in other words, if you owe $10,000 in taxes and you gave $10,000, okay, you will get a $9,000 credit, okay, for a 2-year commitment. But if you owed $10,000 and you gave $10,000 as a gift, you would get a $7,500 credit on a per year basis. Okay.
Now, what happens if you sign up, you commit for 2 years, but something changes in the middle and you don't?
That's a great question. I don't know that one. That would be a question for your accountant.
But there are no handcuffs involved.
I don't think there are handcuffs involved. It would just, I would guess that it would be likely that you would have to report the 90% credit that you got in the first year. You would have to report an overpayment, and you would have to pay that back.
And you pay it back the next year. That's what I'd suspect too.
I think another question I heard was, is this something you have to renew every year? How frequently do you have to file the paperwork to be in the program?
How frequently do you have to file the paperwork? How frequently do you have to renew?
So you're basically, once you're enrolled. And also, just like you said, who you direct your dollars to, pretty much that's who you're set up to give your dollars to on an ongoing basis. So you would have to file some paperwork in order to change that. You can't just hip, skop, and jump.
So
Can't play hopscotch.
Well, yes. So when we did it, the first year we found them. The second year they found us. That is, so we signed up for a 2-year commitment, but then the second year they contacted us with all the basic information already filled out. You still have to, put the amounts in and allocate to the school of your choice, but it's much easier the second year. Can you commit? This gives me a question. I don't know the answer to this. Can you commit for more than 2 years?
I think it's just the 1
2
or
years.
the 2 years.
Years at a time.
But I think it's done in perpetuity.
We're gonna play
Yeah.
ping pong. All right, back to you. All right. Do you pay in a lump sum or do you make payments?
So you gave me new knowledge based on ASCI. Did I get it right this time?
Yeah.
So ASCI will actually help facilitate ongoing payments throughout the year that accumulate to whatever your yearly payment is going to be.
When we did it, it was a lump sum, but we didn't have ACSI when we did it. So this is better.
ASCI, or you asked what is ASCI? ASCI is the accrediting organization.
Right,
for the
Association
school.
of Christian Schools International. That's who is behind the links on Phil-Mont's website. I mean, if you go to Phil-Mont's website, it's actually going to direct you to the ACSI paperwork and the way that's done. Eric. All right, so the question is, are these special purpose entities capable of receiving 529 gifts, allocations?
So that wouldn't, because it's not for the purpose of paying tuition, it wouldn't be an eligible expense.
It's a great question. I wouldn't have known the answer. I'm glad you're here.
That would be a little bit of double dipping, absolutely. When it comes to double dipping, never in taxes. You can't do it. But yeah, it is a good question. But on that point of 529s, you can use 529s also as a pass-through. So 529s don't have a waiting period, meaning you can, for regular tuition, you can use a 529 as a pass-through and pass through up to $10,000 from K to 12 education.
Put it in, take it later.
Yeah, exactly. Put it in, take it out.
Somebody knows what they're doing with this stuff. That's good. All right, can you use Roth IRA funds for SPE allocations, EITC gifts?
So that's a great question for the planner, right? So talk to your accountant about doing the taxes. Talk to your planner about where to source your gift. So you can absolutely use a Roth IRA. The upside of using a Roth IRA is when you contribute to a Roth, you're contributing on an after-tax basis because it's an after-tax account, okay? A Roth IRA has a 5-year rule, meaning that when you contribute to a Roth IRA, you have to keep your money in a Roth IRA for 5 years. Then you're eligible to take it out without penalty. If you take it out before the 5 years, you are still subject to the pre-retirement penalty of 10%. So it would actually not behoove you to take money out of the Roth IRA to use it for your gift, okay, if it's within the 5-year window.
Is EITC beneficial only to people who get, you're talking about Pennsylvania tax refunds?
I don't necessarily think so. This is money that you owe, or is owed to you. So it doesn't necessarily matter whether or not you came out on the positive or negative end. Probably the most pertinent question is do you have the disposable income to make the gift, right? And if you do, there's not really a downside in doing it. There's only upside here. The upside is you are getting autonomy over where to direct your Pennsylvania state income tax dollars.
So let me take a crack at this from a lay
Go ahead.
level and then let you correct me where I'm speaking in ignorance, and Bummy, you can erase this part, edit this out. So refund, whether you or not you get a refund, depends on how much you're having deducted from your paycheck. This program is built on how much you owe in Pennsylvania taxes, so that this actually reduces the amount you owe. The downside being you've got to give it as a gift for it to be tax exempt. Does that sound pretty accurate?
Well, we all owe Pennsylvania, income taxes. So whether or not you got money back, you still would have owed over the course of the year. So it's just that you would have needed to have earned enough to owe the $3,500 in taxes. I think that's the thing. Even though your gift now can be as little as $1,000. So that's the whole thing. Yeah.
All right. What are the pros and cons to the school and to the giver? So the taxpayer who's participating in this program and making it a gift. What are the pros and cons to those? All right. So for the school, I'll speak on the school's behalf. It probably would not make a difference if you gave the same amount directly to the school. That sound right? I mean, and I have talked to a couple of our friends of Phil-Mont that give generously, and have said, well, we don't want to fill out the forms. We'll just give directly. There are people who choose that. So the pro to the giver is that unlike a gift that you write with a check, you just give a check, you get 90% or 75% back eventually, and you can recycle it. So the benefit to the taxpayer giver is the first year it's going to feel like a gift. It's not going to feel that much different than a straight gift. But you get it back and you recycle it. And it's like you're giving one gift the first year and then recycle it. But Phil-Mont gets that, what to you is a recycled gift. We're getting that new money year after year. The con to the giver, it involves some paperwork and it involves some budgeting planning. You've got to be able to do with it, particularly the first year. You've got to be able to do without it for that 6 months, 8 months, 10 months, however long it takes the Pennsylvania Revenue Service to get to file your tax return and get the refund that's due you to you.
Absolutely. There's, in terms of pros and cons, the chief, or one of the chief pros is the funds become dedicated funds. So they're dedicated scholarship funds. So giving a check to the school or just in a plain gift gives the school discretion to use it however they want, except if you stipulate, for the gift, which takes paperwork anyway. So why not just do the paperwork and fill it out? So it is dedicated funds for something that's very specific.
Oh, I'm so glad because you stimulated other thoughts.
Okay.
So for Phil-Mont, right now we have some dedicated gifts for financial aid and scholarships. We have some money, but I told you, right now we give $500,000, $500,000 each year in financial aid, and we don't have donations to cover that. EITC is specially allocated. Every dime of it has to go to financial aid. If we got to the point where we had so much EITC participation that now we've got $1 million coming in through EITC, well, then we'd have a big problem. We'd have to give more in financial aid.
Which has happened. There are schools that have given back money for tuition paid, particularly Catholic schools, have done such a great job raising money through EITC that they've actually given back money to the student population.
Yes.
They have to refund money.
And I will tell you, as head of school, I will take that problem all day long, every day. All day long, every day. And then one other benefit to the giver, the $500 tuition discount. Okay, so the question is, there is state approval involved. There is a limited number of people who can be approved, who can contribute. Does that affect participation?
I'm not aware of that. I think the SPE is really the thing that determines participation. That as long as you have an SPE set up, that's the thing. Now there may be limitations on how many SPEs can be set up. That's a different question. So statewide. So perhaps that's the limitation there. But individuals, there's not a limit.
The state of Pennsylvania has allocated more than any other state in the country, any other state in the country for EITC. It did get a little hairy there in November, early December, but then the Pennsylvania State Legislature approved a historic high level of money allocated to EITC, so it shouldn't be a problem. I will tell you that ACSI, one of their links goes into that question, and It sounds more complicated and bureaucratic. It's basically, theoretically, there's a limit, because it's not an infinite amount. But ACSI is constantly generating new SPEs under the Children's Tuition Fund to work with that approval. You are right, there is an approval process. There's a bureaucracy that someone has to deal with, but it's not you or me. That's what ACSI is doing on our behalf.
Mm-hmm.
All right, we're coming up on 10 of 8. I do have 10 minutes of shadow puppets planned. No, I'm gonna let you go. Thank you very much. Excellent questions. Thank you for coming out. I am going to show the last slide because it's your company, right?
Oh, yes.
United Capital Financial Advisors. And for those who end up watching this on recording, we welcome you to participate in the program. And there are frequently asked questions on the website that you can get more information there as well. So thank you very much.